Hi guys, what's going on? So I'm going to pop out another Sunday video for you guys today. So we're going to talk about one stock. It's called GNUS. And a buddy of mine, he's learning trading. He's in his first couple months of learning trading. Although he has the mind of an experienced gambler because he works at the casino. So he kind of understands the game quite a bit. I'm going to review some of his trades on this stock GNUS. And well, first of all, let's look at the daily chart on this thing. You can see that this thing is a mess. It's a pump and dump, okay? So let's zoom in, and he traded it on the 2nd of June, but actually he was trading it on the day after as well. But we're gonna look at some of his entries that he traded on this day right here. So I'm gonna go ahead and use the replay function on TradingView, and we're gonna go into some of his entries here. So this is June the 2nd, going into the morning session, all right? He sent me his trade log from his broker. So I've got all his entries here and I marked them on my TradingView chart, and we're gonna talk about his entries, and hopefully this video is going to be educational for him in some way. And it's actually quite interesting because some of his entries were actually quite tactical. So this is a good approach to adapt, and I think that he should continue doing what he was doing. So let's go ahead. We can look at a 2-minute chart. So first things first, he was holding a position during this, and he sold his position at 827 at 295. So that was a sell. The first transaction I have is a sell right here. And now we're going into the open of the market. You can see that this stock GNUS is trending higher, and then off the open we get a push down. The next transaction here is a buy that took place at 931 at 299, and he bought this dip basically. Okay, so he would have got filled right around here, and he immediately proceeded to sell that position at 932.43 at a price of 315. So that would have been right above these highs, and in my opinion that is a tactical sell order because you can see that it broke the high aggressively, but it didn't see much follow through at that point. Okay, so that was a nice scalp right there, and it was a tactical entry, buying the dip down here, and then a tactical sell. Now, if you were buying this dip right here, let's talk about stop placement real quick. Where would you have a stop if you're buying this dip? Well, likely you can see that it tested down there and then it failed. So if you're going to have a stop in the trade, it's likely going to have to be underneath these lows. So the low of that candle was 291, so it's going to have to be under 290, 290.89 approximately. That would be a somewhat strategic stop placement. So bought the dip, sold the rip, okay? An option you could have done was also sold half and then trailed the stop up, okay? You can see that it continued to move higher for a second leg at that point, and then it pulled back. Now this is what the consolidation looked like right here, okay? You can see how we came down for a drastic pullback and then tested it twice again. Now this actually looks a little better on the 1-minute chart. So on the 1-minute chart, you can see it quite well how it tested the exponential moving average. We tested the low price of 327 2 times, met up just about with that 26 period exponential moving average. This buy transaction took place at 10:08 and got filled at a price of 330. So right between the two exponential moving averages, a good buy fill in my opinion. Now, if you bought here, where are you going to have a stop? All right. Now you can use a number of things as a reference point. You can definitely, if you want to be conservative, below the low of the day, below this pullback, or below somewhere below here would be a general good area to keep a stop. Now, if you look at the 2-minute chart, you can see that we're testing the 12 period exponential here. So logically, if you want to have a stop in this trade, it's going to have to be below the 26 period in my opinion. So if you're entering at 330, your stop is going to have to be at least 15 ticks below. I think a conservative approach would be about 15 ticks, even 16 ticks below the low of this pullback right here to the 12 period exponential moving average. Now again, another note, look at how the price was respecting that 12 period exponential moving average right here. The next transaction that took place was a sell at 1014.5. He sold it at 345 for a profit of 15 ticks on this breakout right here. Okay, so let's talk about that real quick. Now, you're long, you bought the moving average. That is a good decision to take profit in this general area because you never know what we can see. We can see a breakout and then a failure. If we see that, then the odds start to shift to see more pullback. Now, what he did was he sold his entire position here. I think that that was a mistake, and not because the price continued higher. Yes, there was profit missed, but I think that the best case thing would have been in this case to trail the stop. Sell half and trail the stop. So what he would have done at that point was sell half the position around 345 like he did, and then keep that stop at break even, or even trail it a little bit higher depending on your risk tolerance. And there was more profit to be made here. You can see we had a nice parabolic move all the way up to 365. So there was another 20 cents of profit there that was missed out. So at this point, he's out of the trade completely. Let's watch this consolidation real quick. We're looking at a 1 minute chart. You can see we had a parabolic breakout, and then we proceeded to break that high. The high was 67. We broke it by 1 tick and then started to pull back. So in my opinion, that's a good entry for a counter trend fade. Now that's the kind of trade I would take. It's all relative to your system, right? So you can see how after that it faded and we had a two-legged pullback right to the 26 period moving average. All right, so again, 26 period moving average, 1 minute time frame. Is this a buy right here? So let's say hypothetically he bought here, but he didn't. Would you have had profit? No, you would not have had profit. So that's interesting, actually. Now let's look at that on the 2 minute chart. You can see that once we tested the 12 period at this point, that's when it started to fail. The sellers took control. We sold off right back to the 26 period moving average here. So we can see that the sellers are starting to take control and they're fading against this two-legged pullback, failed breakout here at this point. So the next transaction is a buy, and it took place at 10:31.43. He bought at a price of 339, which in my opinion is a relatively good fill. Now, buying at the moving average in a bull trend, generally about a 60% chance or more that you will make money. So if you buy here, where are you going to place your stop loss? Probably under here, right? If you want it to be a little bit more strategic, probably under this low, like we were saying before, around 314. So let's see what happened. You can see that we had a little bit of a bounce. So this would have been an opportunity to probably trail a stop. You can see that we have 1, 2, 3, 4 candles that are unable to move higher, where we have similar resistance here, and we're not really making higher highs. So we bounced off the moving average and we're not really making higher highs here. 349, 49, 49, 3 in a row. In my opinion, that's a little bit of a red flag, and I would probably look to tighten the stop at that point and look to re-enter the trade. If we see a bear break with no follow through, that would be a good indication to re-enter long. So right here, when you see this kind of resistance thing, you can see we bounced off the moving average, but we're not making any kind of higher highs yet. And it's been about 5 to 8 minutes already here. So that's a bit of a red flag. Definitely want to keep that break-even stop in. So right here, this is an example of where he panicked and sold it at a loss. So this trade was a loss because my buddy trading this doesn't know how to use stop losses yet. So he sold that one at a price of 321 for a loss of 18 ticks on that one. Once the price started to regain this previous support that we had broken below, he made the decision to buy back. Now, where he bought back was not a strategic area, and I'll tell you why. So this buy took place at 10:49 a.m. at a price of 339. So he bought right here at the moving average. Now this right here is not a tactical entry, because you can see how we are in fact in a sort of a 1 minute uptrend, and this is the exponential moving average that is acting as temporary resistance right now. He bought right around here at the top tick of this candle, or right below the top tick of that candle. So not exactly a strategic area to buy. The way you could see this is as a two-legged pullback, 1, 2, and then we regain the support. So as soon as we regained 327 support, that would have been a good opportunity to trade as a bull in the direction of a failure. So 327 would have been the general area. Now, if you bought that as a failure, right? You bought this dip right here, regaining the previous support. Where are you going to place your stop in that trade? Probably right under these lows, or a couple of ticks right under the lows. So you get filled at 330, probably 16 ticks below your entry price, which would be 2 ticks below this low right here. A logical stop placement. All right, so he rebought right here. And then what happened was the market kind of started to trend sideways up. You can see we had a couple of mini pullbacks that got bought up pretty easily here. a little bit of a shakeout there, and the low tick was 331. Again, not below the price of 328 that I was just talking about here. So you can see that we're starting to potentially regain this trend. And you can see we regained the 2-minute uptrend at this point. He decides to sell his position at 11.55 for a price of 365 for a profit of 26 ticks at that point. And you can see that was not a bad sell right there. You can see we had a pullback to the moving average, a bull candle right up. We're approaching the high of the day at that point, which is resistance, in fact. So it was a strategic sell at this point. Now, his entry price, again, was 339. So logically, he would have probably wanted to sell half or 3/4 and then trail the rest, because you can see that we continued higher, but again, got slightly limited follow through going into lunchtime. Again, not exactly the kind of market condition you want to be holding in. Zooming out, looking at the 5-minute chart, you can see that we are in still a 5-minute uptrend. So that is my review of my friend's trading entries on this stock GNUS on June the 2nd in the morning session. Scalping, learning how to trade, but not necessarily knowing what he's doing. But some of these entries were quite strategic. So guys, if you were able to learn something from watching this video, please leave a thumbs up, subscribe to the channel. I will see you in the next video. Take care. Bye.